The business of insurance explained. Imagine this. A man buys a brand new car for 12 lakh. 2 weeks later, a flood destroys it completely. Another person spends 15,000 every year on health insurance. Then suddenly, one surgery costs Rs 8 lakh. One family loses their only earning member, but survives financially because of a life insurance policy. Now here's the strange part. Insurance companies collect billions of dollars every year, yet most customers never get their money back. Still, insurance is one of the most profitable businesses in the world. So the big question is, how do insurance companies actually make money? Why do they happily take huge risks? And how did fear become a trillion-dollar industry? Today, we're breaking down the business of insurance. Insurance is actually one of the oldest business ideas in human history. Thousands of years ago, merchants traveling by sea faced a huge problem. If one ship sank, they lost everything. So traders came up with a simple solution. Everyone would contribute a small amount into a common pool. If one trader suffered a loss, money from the pool would compensate him. That's it. That simple idea became modern insurance. Today, instead of ships, we insure cars, homes, health, businesses, phones, crops, and even human life. And the global insurance industry is now worth over $7 trillion annually. Yes, trillion. Insurance today is bigger than the GDP of many countries. Let's simplify it with a real-world example. Suppose 10,000 people buy health insurance. Each person pays 10,000 per year. That means the insurance company collects 10 crore. Now statistically, maybe only 200 people will actually need major medical treatment that year. Suppose the company spends 6 crore paying hospital bills. That still leaves 4 crore remaining minus salaries, marketing and operations, and the rest becomes profit. This is the core business model of insurance. Insurance companies are basically betting that most people won't need expensive claims at the same time. And this prediction is not random. It's based on data, statistics, probability, and human behavior. Insurance companies know which age group gets sick more, which cities have more accidents, which drivers are risky, which diseases are increasing. That's why a smoker pays more for life insurance. That's why a sports car has higher insurance. And that's why older people pay higher premiums. The entire industry runs on one thing: risk calculation. Now, here's where insurance becomes genius. Most people think insurance companies make money only from premiums. Wrong. The real money comes from investing your money. Let's understand this carefully. Suppose an insurance company collects $1,000 crore this year. They don't immediately need all that money for claims. So what do? They invest it in government bonds, stocks, real estate, infrastructure, corporate debt, etc. This money is called the float. And float is extremely powerful. One of the greatest investors ever, Warren Buffett, built his empire using insurance float. His company, Berkshire Hathaway, owns insurance businesses like Geico. Buffett once explained that insurance gives him access to billions of dollars before claims are paid. Meaning, he gets huge amounts of cash, almost for free. Then he invests that money to generate even more wealth. That's why insurance companies are some of the biggest investors in the world. In India, companies like LIC manage enormous investment portfolios. LIC alone controls assets worth trillions of rupees. In fact, insurance companies often become major shareholders in large corporations. So, insurance is not just protection. It's also a giant investment business. Now let's talk about the real fuel behind insurance. Fear. Insurance companies don't sell products, they sell peace of mind. Think about the ads you see. What if something happens to your family? Medical emergencies can destroy savings, protect your loved ones, secure your future. The industry works because humans fear uncertainty. And honestly, they're not wrong. A single accident can destroy years of savings. A hospital bill can bankrupt a middle-class family. That's why health insurance exploded after COVID-19. After the pandemic, millions of Indians suddenly realized how financially dangerous medical emergencies can be. Insurance companies saw massive growth because fear changes consumer behavior faster than logic. But the industry also has a dark side. Sometimes insurance companies refuse claims. Sometimes customers don't understand hidden conditions. And sometimes companies design policies so complicated that normal people struggle to understand them. One of the biggest criticisms of insurance companies is this: they happily collect premiums, but fight hard when it's time to pay. In the United States, health insurance debates became so controversial that medical debt became one of the leading causes of bankruptcy. Even in India, people often complain about claim rejections, long processing delays, hidden clauses, and mis-selling by agents. And yet, despite all the criticism, people continue buying insurance because the alternative is worse. Financial uncertainty scares people more. Some insurance stories changed history. After the Titanic sank in 1912, insurance companies faced massive payouts. After the 9/11 attacks, insurers paid billions of dollars in claims. Natural disasters like hurricanes, floods, and earthquakes regularly cost insurers huge amounts. For example, Hurricane Katrina reportedly caused over $100 billion in damages. COVID-19 also shook the global insurance industry. Suddenly, health claims increased, travel insurance exploded, business interruption disputes started worldwide. And now, a new challenge is emerging: climate change. Floods, wildfires, and extreme weather are becoming more common. That means insurance companies now face higher risks than ever before. In some places globally, insurers are even refusing to insure certain high-risk properties because the math no longer works. The future of insurance is becoming deeply connected with AI and technology. Today, AI can already detect fraud, predict accidents, analyze driving behavior, estimate medical risks, and approve claims faster. Some car insurance companies now track how safely you drive using mobile apps. Drive carefully, you pay lower premiums. Drive aggressively, you pay more. This is called usage-based insurance, and it's growing rapidly. At the same time, startups are disrupting traditional insurance companies with simpler apps and faster claims. The industry is becoming more digital, data-driven, and personalized. But one thing will never change. Humans will always want protection against uncertainty. And that means insurance will probably remain one of the world's biggest businesses forever. So, the next time you see an insurance advertisement, remember this: insurance is not just paperwork. It's a business built on risk, statistics, fear, human psychology, and massive investing power. It's one of the few industries where companies make money by preparing for disasters before they happen. And whether we like it or not, modern life has become so uncertain that insurance is no longer optional for many people. Because sometimes, people are not buying insurance for money. They're buying it for peace of mind. If you enjoyed this business breakdown, subscribe to the channel for more videos on business empires, money psychology, brand wars, corporate strategies, and the hidden economics behind everyday life. See you in the next one.